Yesterday, Bitcoin hit a new fresh all-time high at $123,000. So that marks the sixth day in a row with a higher low on the price. Now, we haven't seen this sort of behavior in the market for many years. Obviously, we've seen bull markets before, but we haven't seen the amount of retail jumping back into the market this late in a cycle. Now, if you are here for the first time, welcome to the channel. Subscribe if you're new here. You're going to get information that you normally don't get from other channels. Now, we have been covering this for years, going back through to 2017. Some of you guys picked out videos going back 8 years, looking at how the real estate cycle, which is part of the economic cycle, and also the stock market and commodities, and of course, Bitcoin cycles have all played hand in hand. And several of the things we're going to talk about today haven't happened before because this is the first time for Bitcoin in the real estate cycle. So although I've been talking about this now for years on the channel, we are getting to that end stage of the cycle. Yes, you've heard me talk about it before, leading into the winner's curse phase, where basically everyone looks like a genius because the markets keep going up. We've seen it with the stocks, we've seen it with AI, we've seen it with stock markets, we're seeing it with metals, we're of course seeing it with Bitcoin, and of course real estate in the US and where I live here in Australia has also been going up. Looking at national averages and particular cities as well that continue to climb despite some of the logical reasons why the markets should be going down. So in today's video, I want to look at several of the key metrics that I'm following to decide whether this market is going to continue on higher, potentially how much higher it's got, and of course, when this is all going to come crashing down. So if you haven't already, hit the like button, subscribe to the channel. We've got a big one coming up for you today, the old never before. So a few of these things haven't happened before, but we think we have a bit of a guide onto how it's going to play out. First being Bitcoin in the winner's curse phase of the real estate cycle. So this is my major hypothesis for my investing. I've been tracking this now since 2012 when I first found it. And simply put, 14 years up, roughly 4 years down. And we say roughly because no one rings a bell at the top, nor do they come out and tell you at the bottom, now's the best time to be buying. These things happen in movements around highs and then back towards the lows as well. Sometimes it takes a couple of years, but nonetheless, we do get some signs that suggest things are turning. For now, we're in this top phase. It's taken a long time to get here. And the last time this happened was when I first started investing back in 2006, 2007. For Australia, that was the winner's curse. Real estate prices were going up. No one thought they were going to come down. Now, of course, I know you're probably here, you're thinking Bitcoin, you're not even in Australia. That doesn't matter. The point is to understand the markets and how they come about year after year after year. At least that's what's happened from my experience, and hopefully I can share a lot of that with you. So that's the first one, just looking at the winner's curse phase for BTC. But we're going to dive into some more charts and more data as well. Bitcoin with the Elliott wave. Yes, we've looked at this just to bring it up to date. The fifth macro wave. So this is like the fifth and final wave. Now, if Bitcoin is a commodity, then we're also at the peak or coming into the peak of the commodity cycle as well. If you haven't heard of it before, check out Kondratiev wave, Kondratiev. But nonetheless, the short of it is roughly 20 to 30 years up and roughly 20 to 30 years down. So it is quite broad, but this goes back over 2 centuries, so over 200 years. And it was found out, was discovered in the early 1900s by a Russian economist who was then later executed because the Russian government did not like the findings because it was not favorable to Russia. It was just the pure raw data that suggested there was further to go with commodities to the upside. And when commodities go up, markets typically also go up. And if they all go up together, then we even get a bigger boom towards those peaks. And that is what is likely happening right now. We won't know till afterwards, till after the fact, but what we can see with the pricing is that things are obviously heading a lot higher. We've seen it with soft commodities, things that we consume. Obviously there's inflation and everyone talks about the cost of living crisis. You know, we've seen coffee go up, beef go up, chocolate, cocoa, that's going up. Everything else that we typically use, that has also gone up. Copper, new all-time highs. So my view is that Bitcoin is in the commodity cycle as well, and it's all happening around the same time. Everything's coming to this peak in the mid 2020s, maybe even a couple of years later than that, in the case of some of the metals that we've been covering. A point on bull markets and just understanding how we can invest in these and do our best doesn't mean that we have to be right. A couple of significant quotes here from Mark Douglas, if you've ever read his books, great stuff. If you have to win, if you have to be right, if you can't lose or can't be wrong, you will cause yourself to define and perceive categories of market information as painful. So essentially all he's saying is that we have to learn to be wrong as well. I don't get everything right on the channel, but as long as we can continue with the trend, know where we're wrong, and then get back in with the trends, whether you're going up or down, long or short, then you're going to make money from the market, and that's how you survive all these years. When you genuinely accept the risks, you will be at peace with any outcome. And especially for new folks into the market, if they're interested in altcoins, just tell me which altcoin is going to win, going to go up 20x and all this sort of jargon. They aren't generally at peace. And I've seen this now through, this is my second cycle online, but third cycle trading Bitcoin and crypto. That's over 8 years. It happens every single time. They are never at peace with what the outcome is going to be. When you're at peace with any outcome, you'll experience a carefree, objective state of mind where you'll make yourself available to perceive and act upon whatever the market is offering you at any given moment now. So we're going to continue on with a few of the never befores. USDT dominance never before has been in a bear market, while Bitcoin has been in a bull market. So this is the first time for that as well. Now I've got another level we want to watch here for discussing the end of the cycle where the peaks could come in. But until then, markets are up, prices are up. We just keep going with the bull market. We can get excited and all that sort of stuff if you really, really want to. Otherwise, keep your head about yourself and just keep watching for the levels where maybe you want to take a little bit of profit. Speaking of taking profits and more information, we have our reports coming out this week, starting today. The economic report. We also have the Bitcoin report coming out and our altcoin report coming out. Link to this is in the top of the video description where you can get more on that. So, coming back to our checklist today, as we'll dive deeper into each of these. Number 5 is also the currencies. So USD, or DXY, the US dollar, in the 18-year cycle, within the second half of the cycle, so this is where we are here, generally goes down. So you may have seen me talk about this before. Even if we have any sort of rallies, we have several levels to watch for resistance and then to see whether that trend continues to the downside. For the last 40 plus years, this has been the case. Second half of the real estate cycle, which leads into that winner's curse phase, the US dollar has absolutely bombed. And you can see these are those years. This is the late 80s into the early 90s. If you weren't trading or investing then, maybe you weren't even born, the early 90s had a recession. There's your recession. In 2008 through to roughly 2011, 2012, there was a shorter recession, 18 months we had from 2008 to 2009, but the economy was still in the doghouse. There was still a lot going on that was not certain for the rest of the market. So here we are, 2011, and you started to see a bottom form around 2011, 2012. Meanwhile, the US dollar had collapsed and then is finding a base. So 2011, 2012, you can see the base forming there. If we come back to the real estate cycle, the bottom of the cycle started around 2011, 2012. So you count 14 years up from that point. That gives us roughly end of 25, sometime into 2026, where we'd expect the US and the US real estate and the economy to peak, not in a sharp point, but maybe in a rounded top where things come down. We'll get some sort of scare event. People will buy the dip, and potentially those markets won't recover back to their previous high point. And that's what forms a lower high. And then markets just figure it out from that point that things are probably likely going down. Stock market, on the other hand, generally will find a higher high because it's not just made up of real estate stocks. So, currency, interest rates, they are high and we haven't seen any cuts yet, possibly even hikes. So the market is still sitting roughly around 4.5%. That's what the US federal funds rate is, 4.5%. We're even beginning to see this creep in every now and then. This is a hike. So when you see 4.5 to 4.75, although it's tiny here looking out to January of next year, so basically 6 months away, and that'll probably disappear over the coming days or weeks. but it is starting to creep in more often, as we've seen over the last several months as me recording this on the channel. So there even is the possibility of that we start to see hikes. And I discussed this on X. You can find a link to in the video description. Now, 18 months ago, where although I didn't get it right with what happened, if we see a pause in the on the rates and the S&P goes down because of the fear that we're not going to get these cuts, we did see what I talked about 18 months ago. Once the initial few shocks are over, investors will realize that markets were doing just fine with interest rates where they were and could start investing again. So we have seen the markets go up and up and up over those years. So it was early 2024, back around here when I posted. Yes, we got a massive dip in tariffs. That's the volatility at the end, but we're now even higher than where we were at that point. Interest rates have come down a little, but they have not come down anywhere near what the market thought they were going to come down to. Here is July, here is June, and the market believed we should have had interest rates under 4%, which obviously did not happen. And who knows, it may not even happen. We may have to sit around the 4s, 4.5s until they go higher. But that's not a bad thing for the cycle going higher and for prices on also going higher. So several of these things we've never seen before, obviously in quotations. We haven't seen them in this cycle. We haven't seen them for Bitcoin, but it doesn't mean that we can't get a read on what the market might do, in particular where it might go. And of course, the cycle continues up as we've seen all these shocks come into play. One in particular, as I just discussed, interest rates, yet the markets keep going higher. Now, into some data and some charts, I think, will also continue to see headlines around Bitcoin, which is just going to bring it to the forefront even more, especially around, say, like market caps, total assets by market cap, and the biggest market caps in the world. People love to discuss these headlines. And recently, Bitcoin did jump to number 5, and then Amazon took over again, number 5. But I think as Bitcoin continues to climb this global assets, the biggest assets in the world, you'll just start to see more and more headlines. It's a nice, easy headline for people to digest and say, oh, Bitcoin's now number 5 in the world, maybe number 4, maybe even number 3 or number 2, if it's able to double from this point and get above, say, $200,000, and if the AI stocks sort of pause where they are. But look, I think Bitcoin's probably going to be in the top 5 for this bull market cycle, and that's just going to fuel more to the fire for Bitcoin and those headlines, of course. And the other one we talk about is silver, and that's obviously doing quite well as well. But the point of the video today is looking at Bitcoin, things that have never happened before, but why I think there's still further upside to go in the market. Now, in terms of the time frame, so we're discussing some of the narratives that are going on, discussing how to keep our heads about us as traders and investors. Some of those time frames we're running towards the end of. Now, I looked at it today and I thought I'd break it down to 3 simple areas: quarter 3, quarter 4, quarter 1. So quarter 3, quarter 4, obviously 2025, and quarter 1 would be 2026. I think if we were unlucky, we're going to get a top in quarter 3. I think normally speaking, like going back to each of the historical cycles, a top in quarter 4. And if we're very lucky, we'll get a top in quarter 1 of 2026. I think those two are going to be close together. So we've had several time frames to watch that expire in August through to September, which is why I've still got quarter 3 on the chart. So we'll have to assess where the market ends up at the end of this period. And to make a nice little view here, you basically just put a box on those areas for quarter 3. That's where I think the tops could come in. There's quarter 4, and roughly speaking, there's quarter 1. So if we start to see the market, in this case Bitcoin, find resistance, and we see a few of our other indicators, as I'll get to in a moment with USDT dominance, start to hit some support at critical long-term, historic sort of levels, that could be an indicator for us that we might be seeing a top forming. We're not there yet, more upside, but as I like to point out when it comes to bull markets and bull market quotes and reflecting on traders and investors gone by who are much more experienced than I, this is the sort of thing that I expect or suspect that they do as well, is just keep a level head about themselves. Markets are going up. at some point start to lock in profits. How do you know when to lock in profits? I like to use time-based analysis because at the end of the day, some of these things pretty much will just run out of time. And as we've been following now for several years, the low to where we are, we're at around 138 weeks, and these cycles generally run for about 150 to 160 weeks, as you can see below. So that takes us out sometime into the early part of Q4. So if we do get that overrun, like we talked about with some of these swings higher, this is in previous videos, so anyone that is new to the channel, obviously stick around, hit a like and subscribe. A quick recap here, looking at the tops from this point, from the low, in April to those top points, roughly 21 to 32 weeks, and we have collected these from each of the previous cycles. After a severe decline, how many weeks left in that move to get to that final top? Couple of the times have been, or the last 3 cycles have been 20 weeks, 22 weeks, and 21 weeks. And the other number I have here is 32, which is basically the major correction into that low that only lasted about a week and a half and then ran up for 32 weeks into that final top. So if we're moving into this sort of final phase, and the reason I'm using that is because I'm putting all of these together, looking at the 5th and final wave, which is generally the biggest. This is in terms of Elliott wave. We're looking at the winner's curse phase of the 18-year cycle, so more and more money printing is coming in. Recently, we saw China print even more money yet again. There was about 300 billion the other week, and maybe another several hundred billion in the last couple of days. I'll come back to that in future videos as well. And we have the USDT dominance breaking down, and we have the currencies breaking down. You can bring on those sort of narratives around where else can people safely store their money. And of course, interest rates are potentially staying where they are, and you're starting to see a breakdown with yields and bonds. So that's a little bit of a scary thing there for the market long term. We might have that extra drive for the Bitcoin price to continue higher into this later time frame. As you can see, it runs into December of this year. So basically about 5 months away. And the other thing, well, obviously if you just measure those out with the weeks, that's roughly 5 months, 4 to 5 months is typically from the lows to the top is when the market can run out. So we have quite a few time frames to watch here. I think it's going to be really important now because of where the market sits. So we got to use the time and the price analysis, looking at those resistance levels. Naturally, as humans, we all want to know a price target. Give me a price target so I can just sell out of everything. Unfortunately, the markets don't work like that, but we do have a few tools that have been helping us out through this journey, looking at price extensions of previous moves. So what has the market done previously, and then projecting those runs off significant levels. And that's how we come up with the next price targets. We've hit our $120,000 level, so that early 120s. Now from that point, we've got a price cluster here in the mid 130s. So we're still a little way off that. If we take a measure from where we currently are, about 13% move. And I believe from the low, we've also done, there we are, about 21% so far. So from that low to that next target, that would have been about 38%. So we're halfway, over halfway to that next target of the mid 130s. Doesn't mean we go straight up to that point, but I think we've got that left in the tank, at least to that point. The next levels above that, which have the cluster that I'm following, are in the mid 160s. So there's a bit of an overlap. You can see here 164, 165, 168. Take a rough average through the middle, somewhere around that mid 165, 166. But I think there's a little bit of work to do to get there. And by work, I mean following what the market does. Look at the patterns here before people get too over the top with their extreme greed and their extreme emotions. This is a weekly chart, and you can see the amount of weeks to the upside. So if we can just forget the colors for a moment, and if this helps, turn them into white so we don't get too distracted with reds and greens. From the swing low to the swing top, we have 1, 2, 3, 4, 5, 6 weeks. And I've done many counts before on the channel looking at how long can these swings last before you see a pullback. And 6 is usually quite rare. Often you'll see 1, 2, 3 weeks in a row, and then you get a pause or a pullback. That's especially if you're in a bull market. You can see back here is 1, 2, 3, 4, just touched on a 5th, 1, 2, 3, just touched on a 4th before it dumped, 1, 2 before it dumped, 1, 2, 3 before it pulled back for 2 weeks. So that's usually pretty typical for the market to do. There's not going to be that much energy in the tank to run hard for about 6 weeks. So if we do start to find a bit of a stall in the price action, well, then just know that we've got a little bit of time left. You can have a pullback before we start to run higher. The total 3 market cap is also hitting new fresh highs. Yes, over the last 24 hours, we've had a pullback. It's kind of put a bit of a softener into the market, which is good, especially at this level. It's hitting, as we've been hitting new all-time highs. We can also see that with the fear and greed index, fortunately not hitting extreme greed and just cooling off again to 73, giving us that greed reading. Now, the other point that I had in the intro here is looking at the Elliott wave, 5th macro wave. And this is where we are now. We've run wave 1, 2, 3, 4, 5. This is on a logarithmic chart. Michael has put this together for our education here, TIA. We're running into that 5th and final wave, 5 of 5. Generally, some of the longest and strongest moves, especially if you're in a commodity cycle. And the S&P 500 is also holding now at new fresh highs. We've been tracking the 5-year cycle and also the 20-year cycle. And you can see now for the last week and a half, the price has basically gone nowhere. And it's very similar to the pattern that we've been watching now for the 5-year cycle. It did get ahead of itself just a little bit later than the 5-year cycle, which peaked out here in June. We've now peaked out in early July. But now it's having a consolidation here, just like it did 5 years ago. But that has basically been the exact price movement that 5 years ago did. And where does that take us to the peak? Well, it looks like we've got another run up towards the end of the year, more consolidation, and then further upside. The NASDAQ is also following a very similar pattern. That red line in the background is the 5-year cycle, using the timeframes that happened in the COVID collapse. And it's basically been very, very similar. A faster run right here, the NASDAQ, which is the bars in the foreground. If we turn it onto a white line, so you can see the difference between the white and the red, you can see a fast move up, and then white has now consolidated. Red was consolidating before it started to move higher later in, what are we in, quarter 3. So higher, consolidate, and then a big fast move out there into the end of the year. And the Dow Jones is also doing similar things here, running higher, running faster, almost at a new fresh all-time high. The sentiment for the US stock market is also at extreme greed, has been floating between greed and extreme greed, but this can go on for a little bit longer than many people expect. So that's still not a bad sign here for the stock markets. And if we put all those gains together that the stock market has done, in this case the S&P 500, after 3 months of gains of more than 25% or more, there's been a record that there has been no time in the next 3 to 12 months that the price would be lower than where it is now. And considering if the stock market's still up, it's probably likely Bitcoin's got much further to go in the cycle as well. So although we've seen huge returns, some of the biggest in history in a 3-month period. You can see here, this goes back just a few data points, some of the largest returns. This one's out of the COVID collapse. This one's out of the GFC, 1999 leading into that dot-com boom. You had the 80s, early 80s recession, and then the 1975, the inflation period back then. And 25 was obviously the tariffs. Something big, bad happened, and then the markets boomed from that point. And in each of these cases, they still went higher. Even if you're looking at 1999, it still went higher for another 12 to 13 months after that point. So lots of the data is still suggesting further upside here for the markets. We're also seeing new all-time highs globally. So that's what I was talking about here. We're also seeing with the stock markets globally and in the US, all-time highs for Canada, all-time highs for the UK, Germany, close behind as well. It's had a couple of days off here. The metals, fresh highs again. Yesterday hit a new fresh 14-year high, 39.50, but just had cooled off at the end of the session. And swinging it back to cryptos now, looking at the area of extreme interest. So the USDT dominance has never been in a bear market until we got to this cycle, while Bitcoin is in a bull market. So the candles in the back, let's turn it into a white line. That white line is the USDT dominance. The orange line is Bitcoin's price. So you can see the peak of dominance happened at the bottom of the current cycle that we're in. Bitcoin's gone on a mega bull market. The dominance has come down. Now there's several different reasons why this could be happening. Less USDT could be in the system, and more USDC, and different stable coins have been out. Some have come and gone, like Binance USD. But nonetheless, the chart continues to work for the analysis that at least I present you on an almost daily basis here. So at the moment, 3.7 is the big one that I'm watching for to see if we get a breakdown. Should we get the breakdown, then I think we've got some big parties to have between 3.7 and 2.5. 2.5 is the next key level that I'll be watching. You can see there's some previous resistance, support, a little bit of market congestion, then support at the all-time high, that was the Bitcoin all-time high, which was then a higher low for the dominance, which was suggesting strength for the dominance, which was suggesting a bear market for Bitcoin, and then cryptocurrencies, of course, after that. And then that turned into, obviously, the bear market. So I am watching breakdown here, potentially party here. If there is support that comes in here towards the end, as we looked at with the time frames at the beginning of the video, the price targets that I looked at in the middle of the video, some of the other things coming together, like I've discussed here in the never befores, currencies. We check the yields and the bonds and the 18-year cycle with the stock markets, the Elliott wave coming to a head, and we see the USDT dominance not going anywhere like we've seen in this cycle already at 3.7%, where it's basically just bouncing around. Everyone's getting excited when it drops. Everyone gets scared when it rises. If we start to see something like that again, I would be getting a little bit concerned that things could be ending at that time. So we have several, I think, fantastic indicators that are going to give us a bit of a lead on what's happening. Hit the like, subscribe to the channel if you're this far into the video. Thanks very much. And if you haven't subscribed to the free reports, links will be in the video description for you guys. So lots to cover in tomorrow's video. This one's gone on long enough. I'll leave it till then with the altcoins and others charts and XRP. Until then, take care and peace out.